Aditya Birla Group presents Budget 2015, the Make in India Budget, co-presented by SBI. What market wants.
Well, good evening, ladies and gentlemen. Thank you very much for joining us this evening. To follow Manish Shokhani is a really difficult act, especially when he uses the word hopeful about 322 times in his interview, because then you've got nothing else to talk about except for that hope. But thank you for having us here. An eminent panel of fund managers is already introduced. And I think the question we're going to pose to them, or rather I'm going to pose to them, is the tough balancing act that the finance minister needs to do this budget. Keep an eye on fiscal responsibility and yet find some money in that budget to be able to boost public spending. That's the big expectation. And do it in a fashion which is efficient, because governments are not known for efficient spending, and in a manner that leads private sector spending to return. We're going to talk to our panelists about what they expect from this budget. And Sunil, I'm going to start first with you. The big sort of expectation over the last few weeks that's been building up is whether this budget will give infrastructure a spending push. But before we get to the details of that, my first question is this going to be an investment push budget or a consumption push budget? Because let's not forget, people also need to spend money. We have factories running at below capacity right now. So before you build the next auto plant, you want to be able to sell the cars that you produce and produce to full capacity.
So, very clearly, the budget is going to be definitely an investment-led budget. I'll answer the second part of the question, which is on the consumption side first. See, if you actually see, inflation is at a historic low.
Sure.
So, obviously, the pressure on individuals, P&L is reduced significantly. In fact, the way oil prices have fallen and the way the diesel and petrol prices have been cut, there is already a substantial saving in the hands of every individual. Now you also take into account the fact that we are expecting some interest rate cuts. So the EMIs on your housing loan, on your car loans will automatically also get reduced to some extent. So I think on the consumption side, things are automatically falling in place.
Okay.
From a government's perspective, obviously the push has to be on the investment side, because the private sector definitely is going to take some more time before they are ready or their balance sheets are ready to undergo massive, expansions or massive capex. And I think from our perspective, we would look at the government starting the investment process first. So very clearly, in short, the budget is definitely going to be an investment-related budget.
Okay. In the budget math, Dharmesh, do you see space for them to spend on infrastructure? Yes, there are savings on account of subsidies, especially fuel. Yes, there is higher tax collection on account of the new taxes that they've imposed on fuel or the hike in excise rates. And that could be substantial. I mean, on one hand, I think the savings amount to almost 0.5% of GDP with regards to the subsidies. The extra tax collection, I think by some estimates, amounts to about 0.5% of GDP. So we're talking about 1% of GDP as leeway, some reports say. What's your math working out to?
Well, I think he has enough space to spend this time versus last time or even a few years back. Because oil prices where they are, the subsidy burden is not so high. Even the divestment targets last time were not met. Besides that, we are in a good condition. So this time around, in fact, because the markets are buoyant, there can be higher divestment targets and achievable ones, rather than only setting targets for the sake of it. So I think he's got enough space to spend more money this year around than last time. And end of the day, everybody now is talking about development and growth. And for that, you need to spend money. Unless the government doesn't kickstart the economy, you're not going to see this growth coming in. So now it's clearly, it's like you're playing the last 10 overs and you have a chance to only 2 wickets down. So whether we go and score around 350 from a 250 run target, or we succumb at like what we've done last 2 matches at 300. I think he's got a great opportunity to go ahead and start spending money.
I'm curious to know, will this market be disappointed if he sort of keeps a very firm eye on fiscal responsibility? Prashant, I'll put that question to you. If he keeps a very firm eye on fiscal responsibility and says, I'm not yet fully comfortable to start spending, on infrastructure or to sort of start moving public spending, I'd rather that I'm able to sort of meet my BM related targets. I'm rather that I'm able to pass a new Fiscal Responsibility Act, and once I've seen 12 months of comfort, then consider a big public spend push. Is that what these markets are okay with, or will they be terribly disappointed if there is no public sector push?
I think it's very difficult to say how the markets will react, and markets are precisely like a voting machine, as Manish said earlier. But I think fundamentally the government needs to reduce fiscal deficit, because that is what gives you a sustainable way of growing over long periods. I think they may also support some consumption by cutting some tax rates at the lower income level groups. But fundamentally, if you see, India's tax to GDP ratio is very low.
It's 10% actually.
Yes, and it is lower than where we were 6 years back.
Yeah, that's right.
So it has to go up. And I think the government's job in infrastructure is more to create an enabling framework, transparent regulatory framework. And I think they are working with some very interesting funding solutions. So if you look at what has happened on the road sector, I think it is very powerful. So without really impacting the government too much, so they have created a two-tiered structure for funding of roads, and government is saying, I will bring in the higher risk capital. So I think there is a lot of statements coming that we will work around very innovative financing solutions. So I don't think the government really needs to take a lot of burden on its own budget to spend on infrastructure.
Okay, that's interesting that you say that. I want to come back to some ways on how they can make that public sector push. But before that, I'll persist with the question, Bala and, Chandresh, both to you, on whether has this market set itself up for a big disappointment if all you see in this budget is a keen eye on fiscal responsibility and nothing else?
Bala, you want to go?
Yeah, the way we see is the fiscal is whether it's 3.6 or 4 doesn't matter. I think the number to look at in the overall math, whatever the saving that has been accrued to the government of India in the last few years, which is large in the nature of the subsidies, again coming from the oil subsidies as well as the related fertilizer subsidies and all put together, the estimated number is likely to be somewhere around 1,40,000 crores. And the number, where does it get added up to? The number is actually going to be spent once again on other related areas, such as again giving more money in the hands of people, or allocating more money in the hands of infrastructure companies in terms of building the necessary infrastructure. The way we see is, I think the allocation towards the capital expenditures to be undertaken by the government of India would be largely the true indicator of the commitment of the government in terms of getting back the growth path for the next year. So that's one. Second is, even in terms of tax collections, we actually had done some analysis. There is one component which is of course the service tax component also has been on the rise. So there is a high likelihood of the tax collection, especially in the service tax, also showing some kind of uptake. So in nutshell, if you look at it, I think the large expectation in the market is whether it is 3.6 or 4. I think whether it is 3, 4 also, I think market will not mind, as long as the money is going to be spent on the productive assets in terms of getting back on the growth path. Also, if you look at it in the recent past, I think like something similar to what used to happen in the case of inflation. We used to go back and reset the inflation. But if you look at today, the budget in all probability may actually put the GDP number about anywhere about 7.5 to 8%, because the base number is also rising. I think there has been a discussion, there has been a complete reworking that is also being done in terms of looking at every component of the contribution to the overall GDP as well as the IIP numbers. So there is a reworking that is being done. In that context, if you look at it on an elevated GDP size, then if the fiscal is about 4%, I think will be probably welcomed by the market. So
you're saying he has enough cushion to spend.
Exactly.
And so therefore it's not going to be a very difficult choice for him to have to make.
Exactly.
Okay, but I'll still persist in the question. Will markets be very disappointed if he doesn't do that? If you don't get a game-changing budget, are you in for a big bout of selling in the markets?
I think there will be a big disappointment. I think there is significant fiscal space, and while I'll belabor the point a little more, actually if you look at the total tax revenue which is going to be there and the other non-tax receipts, actually we are seeing a growth from 15 lakh crores to 18 lakh crores in the next year. This is, I'm taking both the state's share as well as the center's share. And this is all after, there is no devolution in this case because this number is anyway going to go up. Now, we look at the capital expenditure which we have done, let's say in FY 14 and 15, I think the total investment is in the region of 200,000, 250,000 crores. Now, if we can raise that number by 50 to 60,000 crores, it's a big impact to the economy. And why not do it? It's a counter-cyclical move by the government. The private sector is not in a position to invest. They don't have the money in one place and to the sentiment to invest. And this is, I think, at this point in time, the government should really step up and give that 25-30% increase to capital expenditure, their commitment to whether it's infrastructure, largely infrastructure essentially. So I agree, absolutely. I mean, if they don't really stand up and really push it in at this point of time, it will be a disappointment.
Okay, so we seem to have near consensus on the panel at least, that this is the time to do it, he has the comfort to do it, the maths will work in his favor, there is the cushion to do it. Now the question is, how does he do it, right? This is the most important bit, Sunil. Governments are not known for efficient spending. Our government definitely has not been known for the last several years for efficient spending. So there is this whole ideological debate on whether you really want the government to do this, but assume that public sector spending is the only way to get private sector spending to return. How would you like to see him do it? We've had several experiments before, the IIFCL or IIFL, and none of them have really been big successes. Now there's talk of an infrastructure fund. Manish spoke about how they need to sort of come up with newer ways of being able to monetize infrastructure. What would you like to see the government do?
See, very clearly, you're right that in the past a lot of attempts have been made, but I think there was one big difference. For the first time, we have a very decisive government. So you don't have this coalition, you can say compulsions, which the previous governments had. So at least now, if they decide to do something, they can't say that someone else was stopping them. That is point number one. The second thing is, I think all the factors suddenly have become very positive for India. Whether it's the external factors, whether it's the currency movement, the interest in India. Manish mentioned there is no option, which is a fact. There's so much money coming into India, looking at coming into India, that RBI has had to, in fact, tighten so that too much money does not come into India. So we have this luxury of flows also looking at coming into India. So I think now, I'm not an expert in economics that they should do this or they should do that. What basically our view is that there is a resolve, and there are now avenues available in terms of capital availability.
But is that enough, just the resolve and just the number?
No,
I'm putting 1 lakh crore rupees additional into capital expenditure.
See,
is that going to be enough?
It's all about sentiments and you can say comfort as well as confidence. There is enough money within India, there is enough money outside of India to be put to productive use. You take the example of in equity markets. There's always this talk that there's too much supply coming in, but the more the supply, the more is the inflows also which come in. I think the same is the case here. People have burned their fingers in the past, and therefore this hesitancy of investments. I think right now, you can say the thought process is that yes, the government is determined to do it. As you mentioned, there is a 0.5% saving in terms of the subsidy. There's another 0.5% saving in terms of additional taxation. The direct benefit transfer hopefully should again lead to at least a 0.25% saving as we speak, at least as per our thing. So that's a
so
big
we've established he has the money, maybe,
right.
Maybe if our math matches his math.
Yeah.
We've established that. But it's really important to know what the form of that spending will be. It's not enough to have him put a number to it. And therefore, what are you looking forward to the budget? What are you not looking forward to?
So clearly the various ministers have, have their goals set. So whether it's the power minister in terms of, at least kickstarting the fact that the coal auctions are done. Now you have to incentivize
it. That's thanks to the Supreme Court. Let's not confuse the two. Everybody gives this government the credit for coal
auctions. I don't think so.
If the Supreme Court had not deallocated those coal blocks, the auctions would have never happened. So whichever government of the day would have had to do what the Supreme Court.
This government allocated them back, right?
Through an auction process.
Yeah. So it was done in a very timely manner. What I'm trying to say is that the intent is there.
Because of the Supreme Court deadline. It's April, the deadline. Look, the government has done what the court has required them to do.
The Supreme Court deadline was that after 31st March you can't mine it. The Supreme Court deadline was not that you have to auction it.
No, it was said that you must reallocate. So all I'm making the point is, it's not enough to have a number out there. We need to see that number backed with substance in how he's going to be able to spend it. Therefore, what are you looking for from the
So they very clearly mean that the fact that we have the money, that itself makes our task 90% easier.
Okay, let me ask the rest of the panelists. Does anybody here have a list of do's and don'ts when it comes to how he hopes to spend that money? Prashant?
See, I think the two areas where I think a lot of spend will be seen, one is on roads and one is on the power T&D space. And if you look at what is happening in roads, I think this year we will build 4,000 kilometers, and few days back the road secretary said next year 10,000 kilometers is doable. Now how much does that need? Extra 6,000 kilometers needs extra 60,000 crores. That's it. And that I don't think is a big sum of money for NHAI and private sector to fund.
Sure.
Because government has done something very remarkable. They said I will bring in 40% of the capital and I will take the risk of toll. And you bring in the 60%. So So, which is de-risk the private sector. So I don't think there is hardly any great offtake in the country.
Okay, so
I
roads is
don't
one
think there
area
is a
that you
dearth of,
expect a considerable
what you
outlay.
need is a proper regulatory framework, and so that this capital can earn some reasonable returns. The other space is the T&D space. Now there, the state electricity boards are the ones who have to spend that money.
Yes.
So the central government can incentivize them, give them interest waivers or some grants, that if you achieve this milestones, we will support you in that. So I think the central government in these two key areas has more of an enabling role, supportive role, and I don't think these assets are going to come on the balance sheet of the central government itself. And I think these two areas will see a significant revival. When we talk to companies, we are clearly getting the sense that the bid pipelines are very large in these two areas.
Yes,
But just to add, I think the fact that the private sector is also strived, basically they don't have the money is because a lot of projects have been left incomplete because of some of the other reasons. I think the fact that all this is getting sorted out will ensure that those projects are also complete, and that itself will bring the private sector also in a position to at least finish them and look at other projects.
That's exactly, those are the dots I was trying to connect. A number in the budget to actual projects on the ground which lead to orders for private sector companies, which eventually leads to, let's say, better earnings. So I'm trying to build, A, how will we connect those dots so that we actually have money being channeled towards useful infrastructure projects, and B, how long will that take? At which point will we start seeing a revival in earnings for some of these companies? Because we've just come out of a horrid earnings season at this point.
I'll just like to touch upon one point. I mean, if you see the cycle between 2002 to 2007, all this fell in place in 2004. They did not fall in place in 2002. But the situation or the conditions started to get, ripe in 2002 and 3. With interest rates falling, country becoming more stable, the macroeconomic and the resolve of the government, at least in the last 2-3 years of the previous BJP government being there to push through the the reform process. I think these conditions are getting sorted out. Now, how they will do it, frankly, I'm not an economist. I don't care. I care about which companies are going to benefit and whether it's going to get translated into.
How do we determine that if we don't know how we expect him to spend? Yeah, go ahead, Dharmesh.
I have a very good example. Again, back to cricket. Before a month, everybody was written off Indian cricket team. Nobody in this room wanted to watch a cricket match. And 2 matches, we're suddenly the best team in the world. So it just takes 2 good matches, or just takes 2 good decisions to bring in that, confidence and the sentiment back. Suddenly we beat Pakistan and everybody loves India, which everybody hated when they were still the same ground, same people, different teams, and we perform differently. So same thing in this budget, if we just give even 2 things, which people are looking for instead of 10, I think so markets will be very happy.
So what should those 2 things be?
One definitely will be the push on infrastructure side. And roadmap on how he's going to spend that money. Because there are so many ways, like we were just discussing. There's the entire waterway which can be connected of India, like how you connected the roads. We not even spend 1 rupee in that.
Are you really bringing up the river interlinking project?
Hopefully it can happen. Why not? Because why can't it happen? I'm saying things can happen that front.
Can I just add to what I think? See, ultimately, there are few sectors in the country can consume capital, which is largely the infrastructure, especially a road. And second is the power as infrastructure.
Sure.
And these are the 2 sectors that have become one of the focus areas for the government for many number of years.
Sure.
And we are at a stage where probably we can put it in a fast track for them actually deliver what they are supposed to deliver, both in terms of kickstarting the whole private sector's capacity that has been built. Even there are few sectors in the country, if you look at today, cater to the infrastructure needs of the country, but they are all operating at about 40-50% capacity utilization. So therefore, the first focus actually is how to get the existing capacity utilized.
Absolutely.
Which I think will largely come from the power sectors, it could come from the metal sectors, it could come from the cement sectors, it could come from the road sectors. And that's I think the focus which has to come. So just to also come back to the whole question which you had, earlier question what you had, I think fiscal is all only one number. I think the budget will also be looked at in terms of how the overall direction also is coming, not just only from the spending point of view, even in terms of building up the whole ancillary that could consume this capital as well as the overall the activity levels could go up. So that's why I would probably see the budget.
Can you put that down into a specific, what is it that you will see in the budget that will please you, that will tell you that look, markets are in the right direction, which is upwards? Or what is it that will disappoint you terribly and you will say, okay, this is not what we had hoped for?
See, I think related points is of course one of the areas which is identified an area of focus for the government is the low-cost housing sectors. Low-cost housing sectors. But the question is the interest rate is appropriate for building up the demand for the home loans? And there is still a scope. And at the same time, the limit that has been set actually for the housing as a sector, they all said about 4 or 5 years back. Has there been any kind of the push that has been given for the consumers to actually look at housing as a sector, for them to borrow and do the housing buying? So I don't think there has been any kind of effort that has been made in the last 2
So
3 years.
what kind of solution are you expecting
The solution is low-cost housing is saying is one side, and the second is what is the kind of support that could come from the budgetary provisions to ensure that the consumers are also looking at the sector
So you
for
mean
investment.
support in terms of, let's say, some kind of interest subvention?
Exactly.
You mean support in terms of some kind of subsidy? What is it that you're looking for?
Anyway, the limit which is there, about 1,15,000 rupees, the limit that is there, plus you have additional limit for interest on housing loans.
Okay.
Probably that could also go
So
up.
a high exemption of some sort related to being able to purchase a house of a certain amount within a certain budget.
True.
That's what you're hoping will be the impetuses. But these are not big ideas, right? So therefore, what I'm trying to understand is, these are incremental changes that add on to what governments have done over several years in India.
True.
Are we looking for a big idea? Are we just looking for better execution of all the ideas we've had over the last several years?
Yeah.
That's what I'm trying to pin down. What is
One of the big
expectation?
idea which I think, again I come back to the one, many sectors have to consume capital, and second is we should also be put in a position to fund those capital, fund the needs of those sectors. So only fiscal can fund only up to an extent. What are the other ways and means the funding can also be done? The other ancillary subsidiary companies of the government of India, who are in the sector of actually is building up the power sector or building up the road sectors, can actually the balance sheet also be used actually for the purpose of spending? So that's one question mark. And second is, what are the kind of effort that could actually come from the government to attract the foreign capital actually to fund these infrastructure needs of the companies? These are the two, three areas where probably some kind of direction can come from the budget. Everything cannot come only from the fiscal numbers, everything cannot come only from the direct tax collections. We know for sure direct tax collections cannot actually overnight go up. I think these are some of the fundamental change that could be brought in the budget in terms of direction, could probably set the ball rolling.
Okay.
Yeah. So I think from the budget you're looking for two things. One is from a short-term perspective, we know general growth is not there. Investment demand in the economy is virtually flat, zero growth from the double digits we used to see for some years back. So there is a need to kickstart it, and kickstart it pretty quickly. And that's where I think one of the sectors I would add in terms of where the government can spend is railways. I mean, we'll see 2 days later what the rail budget has in store. But I think that's one area where lots can be done. Now the issue is whether the projects can get finalized, and can we see impact of that in the first 6 months? Probably no, but maybe second half of the year. Anyway, we'll know about that. The second is the more important thing, which I think everybody is talking about, is to how to get a sustainable growth in investment demand in this country, which is something which is really broken over the last 4 or 5 years, especially after the telecom scam broke out. Now that's all about confidence. So there are two parts to that story. One part is to fix the old projects, because otherwise the entrepreneurs are not going to have the confidence to come in again. Now does it get sorted in the budget? I don't know. But it has to get sorted out over a period of time. Part of it can get sorted. So today, if you see in the Finance Commission's report, they are talking about 2 lakh crores being given to the weaker states. So they are trying to fix some of these problems. Maybe some kind of adjustment is needed, some kind of budgetary support is needed to get some of these projects up and running, which we all know the government is really trying to fix. That's one part of the story. The second is the banks. I mean, ultimately, to get the investment cycle going, who's going to fund it? Okay, there are going to be basically 3 aspects, 3 avenues. One is the government. We know government doesn't have too much. That is very clear. The second is the local entrepreneur, and third, supported by the local banks, and third is the foreign capital source, to say. The banks, because of, again, the same past problems, there's virtually no capital. I mean, if you look at it, the requirements of the banks over the next 3 to 5 years is estimated to be 250-300,000 crores. Where is that money going to come from? So there has to be something to address both these parts. You have the sentiment improvement, balance sheet improvement of the old companies involved in infrastructure, also the banking systems, you get that going, and then get the regulatory framework in terms of transparency in bidding and all this happening, then I think we are home.
How is the banking bit going to be done? Are you hoping that this budget will also find the money for bank recapitalization?
We will have to. They will have to find the money.
So how much money do you think there is available in this budget? Because we are expecting a lot, but the reality is that tax collections, at least for the last fiscal, have been way behind target, And even if you scale that target down from 16 or 20% to 13%, it's still not going to be the easiest thing to achieve. Disinvestment, we are way behind target in FY16, and there is no reason as yet, right now, to believe that we are going to meet all the targets in FY16. There is no talk of privatization in this government as yet. So where is the money going to come from?
So actually, in this year, we are going to see, one part is the fuel part of it, which is both on the subsidy side as well as...
You're betting on $50 for crude
for
the full calendar year?
For GST, I think there will be some alignment which may increase the service tax rates. So let's see how that works out. This year there is money. I think that's...
FY16 is what you mean there is money.
FY16 there is money. But that still doesn't solve the banking problem.
That doesn't solve the banking problem.
So government has to come out with a firm stance. I mean, if they are not going to be able to give out that 300,000 crores, so which means half of it, since they own maybe 50-55% of these banks, they will have to provide half of it. If they are not willing to do that, then there needs to be a clear roadmap of how they are going to, are they willing to let their holdings fall below 50%, a big political issue. But I see that as a big bottleneck long term.
And a legislative issue. Because in some of those banks, you need to make sure that there are changes in law for them to be able to do that.
And the third option, which I was just mentioning about, is whether we get international capital. I think international capital is waiting everywhere to get in. But it needs those same confidence in the government policies, continuity and transparency.
And a sense of structure. How are you going to go about spending this money? Nobody's going to say, we love this government, here's $50 billion.
The money. Absolutely.
No, nothing works like that in the world.
I just wanted to argue on that. I think the foreign capital, what you mentioned about, I think the view in any case getting emerged in the global market, the interest rate is going to stay soft, and the liquidity is going to remain high for a pretty long period of time. It essentially means money is available cheap to fund the growth. Secondly, even if you look at the current limit that is available, there are only about 65,000 crores limit that is available for overseas investors investing in bond market. And recently there was an auction for investing in Government of India securities. The premium what they have paid actually for buying just 5,000 crores worth of government securities is 1.5 rupees per 100 rupees. So that the kind of demand that still exists. So the funding from the global market to fund India the growth story is not that difficult as long as the budget gives a direction, a very clear direction that the government is serious enough in terms of building the growth back in the next few years.
Okay, I'm going to give you one more statistic. I think one of the reports I was reading said that overall public capex, which is capital expenditure, is about 8% of GDP. What the government provides for in the budget is typically only a fifth of that, about 1.7 to 2%, not more than 2% of GDP. So that's the role that budget announced public spending plays, in the economy as a whole. I'm trying to connect this to when we'll finally start seeing the good news sort of trickle down through the economy and a revival, therefore, in corporate earnings. If we do get some of what has been spoken of, in the panel here in this budget, how long do you think it will take corporate earnings to revive? What are you betting on based on the companies you're invested in, Sunil?
See, I'll give you a perspective. First of all, the spending on the central side is one. The state spending also is there, which we are not discussing right now. And the fact that this coal blocks will give thousands of crores to a few state governments year after year, that also we should not ignore. Coming to what will trigger the corporate earnings, I think earnings are a function of two things, the operating leverage and the financial leverage. On the operating leverage side, a lot of companies have built capacities, but because of what we saw in the last 4 or 5 years in terms of lower demand, they were not able to utilize those capacities. Once the capacity utilization improves, then you'll have a massive, operating leverage playing in.
How long will that take?
I don't think it will take more than a year.
A year?
Yeah.
Okay.
And the other thing is the raw material and the input costs have gone down so significantly. You take cement companies, they consume diesel. Diesel prices are down like 20 rupees a litre. So you'll also have a kicker in terms of their raw material costs going down and therefore the profit. And the second thing is on the financial leverage side. As long as the country has 10-11% interest rates, we are going to go nowhere. So I think this budget is going to be a direction that the interest rates are ultimately going to go down. That will be a combination of fiscal discipline, that will be a combination of taxes becoming a bigger part of the budget and so on and so forth. I think once the financial leverage starts to play in with lower interest rate, you will automatically start to see net profit as a percentage of operating profit go up dramatically. Between 2004 and 2007, in 4 years, there were 3 years where corporate profit grew 27%, 28% and 37%. Right now, we are all expecting profit growth to be 15%, 14% because of what has happened in the recent past. But what has happened now is a reflection of the decisions taken 1 or 2 years back. And what is going to happen in the next year and the year after that is going to be a reflection of what is happening now.
So are you confident the worst is over in terms of corporate earnings? That
Definitely.
we bottomed out with the last
Definitely.
quarter?
That is the reason we are all in the fund management business.
I'm just asking. Prashant, would you second that? You're confident that we've bottomed out on the corporate earnings cycle?
I think next few years corporate earnings should be meaningfully ahead of estimates. I think that is...
So next quarter's earnings, which is Q4 of FY15,
see, quarter is
going to be
always
less painful?
See, I don't think even last quarter was very painful. It's basically a question of where your expectations were. But I think directionally, in my opinion, we are very clear next few years earnings should be much better than what estimates are suggesting right now. I think, see, we have to be a little patient. See, there is one difference between consumption and capex. If you give a tax break today, 100 rupees, person will go and spend today. So the demand growth, the impact is instantaneous. But in capex, it cannot work like that. You set the law right, you create the right legal framework, you award a project, you do a tender, then the financial closure, then ordering, and then execution. This takes 4 to 6 to 8 quarters. So I think we have put in place a better framework in the last few quarters in a number of areas. The ordering pipelines are very good. If you go and check the details in few areas, railways should follow over next 2 quarters. Roads and T&D is already there. So I think the capex will revive, and I don't think the government can let go of the fiscal deficit because the nominal GDP growth in the country last year and next year is all-time low levels. So your tax revenues cannot grow much faster than nominal GDP growth. So I think the government's job is to basically lower interest rates, lower fiscal deficit, right framework, and lower interest rates is a very big boost to capital expenditure. I don't think we can...
That's not in the hands of this budget.
No,
not entirely at least so.
No, it is because how you manage your finances is the most important variable for interest rates.
Sure, fair enough. So,
in fact, I have not seen in the last 25 years this kind of tailwind which is with the government on every aspect. So you look at the interest rates trending downwards, oil prices are down, So the kind of situation we are in India today, this gives a great opportunity for this government, politically also and economically also, that they can do great things for this country, which needs. So, as Manish rightly said, when you go abroad...
No, I don't think anybody here disagrees with you. I think we're trying to see or visualize what can be in the budget. Therefore, what companies benefit from it. Therefore, what stocks they should buy.
But
essentially, that's where this conversation is going, right?
Yeah, but see, the budget, all the stuff, you only know once the budget is out. You can't pre-guess because what's the focus of the finance minister in the budget on which sector is always different budget to budget. So maybe this time they may take road and power as a sector. Next year it will be something different. And I have seen in last so many years, budget matters only for that 1 or 2 weeks. End of the day, by May and June, we'll be talking monsoon. This is how the monsoon is. So people forget the budget. Like last budget, I believe, was a disappointment to the market when the new government came in. And we are at a new high today in 6 months. So within 3 months.
I do have a question on markets and budget.
I'll also give you one statistic. Last 15 years average, returns for the index 1 month after the budget is 0%.
0%. Yeah. So then why are we having this panel discussion?
So we are here to basically advise that India is a great country, there's a great opportunity. Invest not for this budget, but for 5-7 years.
Okay. So irrespective of the budget, invest. That's the conversation.
Yeah. Well, when Mr. Modi came with the full majority, that day the markets were down. Okay, the next day when the election results came out, the markets were down. And now we are at a new high.
Okay, so I did have a question on how relevant, after spending 20 minutes talking about the budget, how relevant is the budget to markets in the medium to long term? Please go ahead.
One point I wanted to highlight about the earnings improvement that could potentially come for Indian companies. If you look at the bank base rate, is around 10.5%. The companies are able to access the capital market at 2% lower than the benchmark rates. The bank benchmark rate at 2% lower than that, they are able to access the capital market. Today, 10-year bond yields trades anywhere around 8.6 to 8.9. whereas the same 10-year loan is still coming about 11 to 11.5%. So therefore, any reduction, potential reduction that could come, one, because of fiscal consolidation, second, because of the sustainable inflationary, low inflation scenario that could potentially come for the next few years, and then if there is a 50 basis points cut in interest rate, can potentially lead to a substantial savings for corporates in terms of interest costs coming down. So leave aside the rest of the thing, which in any case will be directly related to the growth and various other things. But this one component comes down. I think market will always look at, is my earnings going up on a quarter-on-quarter basis, or it is remaining flat? I think the feeling that could potentially emerge is the quarter-on-quarter earnings. Maybe you could see the improvement that is coming on corporate profits. That itself will be enough actually for keeping the overall sentiment in the market alive.
Okay, so you're saying budget is not a factor at all.
Yeah.
Have we spent 20 minutes dissing the budget?
No,
After saying we have great expectations from the budget, we're saying doesn't matter whatever the budget does, markets will still give you 0% return.
Having said that, we need to look at, of course, beyond the budget, because budget is one instance, and we have to look at beyond budget as well.
Okay, we'll look at beyond budget. I have one more question on budget, and that has to do with actually one big government policy, which is Make in India. And I spent the last 2 or 3 weeks talking to companies, asking them, what does Make in India mean to you? And it's a great concept, and it's in its early stages, so it will take a couple of years to be fleshed out. But the problem with Make in India is that Make in India is a function of 3-4 different things: land, labor, taxes, and taxes tend to come like later on. And then, of course, government policy, ease of doing business, etc. Not a single company I've spoken to feels confident to be able to implement that Make in India right now, saying either they have capacity that's not being utilized, or a balance sheet that cannot support it, or demand that they don't see in the economy for any of this, or if they see all of this, if they have all the right internal factors, they don't want to get into the land jhamela, as they call it. They want to see an improvement in labor laws. And then they'll draw up this long list of 20 tax incentives that they want, and they say, okay, if all this happens, then I'll Make in India. I'm just curious, do you see big support in this budget for this Make in India policy? Can this budget do anything, or should we actually visit this only 2 or 3 years down the line? Sunil.
See, frankly, again, the budget is going to be more a direction kind of a document.
So we're not expecting much?
No, there will be, obviously, last time, with all due respect, the Honorable Finance Minister had a 2-hour speech. So obviously he's going to speak at least for an hour and a half this time also. So there will be definitely announcements. But this Make in India is a concept which is basically an announcement or a direction from the government that we want to incentivize manufacturing in India, which we have missed. In fact, Mr. Panagria, who is now the Vice Chairman of Niti Aayog, and there is a big interview today also, he is very, very clear that India needs manufacturing in sectors which can employ many more people.
We've known this for a long time.
Yeah, so basically, see, all these nitty-gritties can't be a part of the budget. So labor laws, land acquisition laws, those will be outside the budget. What the budget can do is give a sort of a direction that this is a focus point. For this, obviously, we will be doing a few things. Within the budget, like entrepreneurship, for example, it's a very small outlay of 1,000 crores which is being reported, but it basically leads to a multiple effect. Same is the case with Make in India. They are going to obviously try and give some direction, but ultimately this labor laws, the land acquisition laws, the cut in interest rates are going to be outside the purview of the budget. So I think budget is going to be more a direction kind of a document, rather than saying that, yes, we'll do 60,000 crores worth of this or 1 lakh crores worth of this.
Anybody has a view here on how the budget can tackle Make in India, make it more actionable, or do you think that it's early days yet?
I think it's really early days. I think there are, as was mentioned, I think it's a complete package which is required.
Sure.
I think, it's not just about Make in India. I mean, the idea is to make in India at a good cost, a good quality, I think. And obviously there are other bottlenecks like land and labor laws, etc. So, and please also realize, I think part of it is borrowed from the Chinese model, which is more export driven, which I don't think really they are going to give you the space to really grow that. So it's all dependent largely on local demand. Yeah, but there's still a lot which can be done. So I think it's a mix of policy, which is land, labor, and it's a mix of tax incentivization, which can come from the budget. Rest of it gets handled outside. And then it's about also getting the capability up in terms of doing it at a good price and getting the quality in. So if you look at large parts of employment generation, for example, happens in the small scale sector. Now, how do you get technology transfers? How do you get one thing which was talked about, entrepreneurship, supporting the entrepreneurs with seed capital, etc. Now, all those things have to come together to really make this Make it India really happen. So,
I have a different view. I think so because it is such a big push by the government, they'll have to make it happen. So in fact, earlier the promoters wanted to do that, but they had a lot of difficulty getting this done. Now, because it's such a big thrust by the government of India, there will be everyday press coverage of what are the difficulties faced by people, why it's not happening. Opposition will play on the same theme.
In this budget, do you
Not in the
expect
budget, I think
generally speaking over time. Okay.
So I believe, I'm more hopeful this will happen because it's a big thrust from the government rather than from the promoters.
Okay, Prashant?
See, I entirely agree with what Sunil said. It's a theme, Make in India.
It is a theme.
Land, labor, interest rates, infrastructure, these happen outside the budget. I think one thing with the budget can do probably is to correct the inverted duty structures which we have in some cases. And I think that is what is specific to the budget for this.
Okay, I was just trying to work through some of the common expectations that have come up over the last 1 year, 1 month, infrastructure push, Make in India push, tax push. That's the third one I wanted to talk about.
Government policy framework, tax structures is very important. I mean, for example, over last 5 years, maybe we have imported close to $50 billion worth of power equipment because of a certain policy framework then, which probably can change today because you have capability to manage, manufacture those, and it needs some government support by way of policy or duties. So I think something to correct the inverted duty structures, I think we can look forward to in this.
Okay, my final question is on tax. My final question on the budget is on tax. Is anybody expecting any big tax changes here? For instance, let's do away with the first slab of tax altogether. I've been pushing that one a lot, saying, I'm not sure how much money we collect, and I'm sure the cost of collecting that money really almost negates what we get in that. So, anybody expecting any big tax changes?
One is the big announcement which we would be expecting is the direction on the GST.
On GST.
Yeah, I think that is very, very crucial, both from a revenue perspective as well as from a direction perspective. As far as, removing completely the lowest tax slab, I think what it does is it removes a lot of people from the purview of tax. I don't think that is the intention of the government. So there might be some relief, as one of the panelists had mentioned earlier, but to remove a significant portion of the population directly from the tax net, I don't think that would be the intention.
So a higher exemption maybe.
That may be. I don't know.
Okay. We've, on TV, spent too many hours talking about MAT. So I'm not going to ask any questions on that and the impact on corporate India. But any big tax policy changes otherwise that you're anticipating that will define this budget for you?
I think our tax to GDP ratio has to go up. But,
so expanding the base.
But I think if you look at the philosophy of this government is to not do away with subsidies, but to give subsidies to the really deserving and to the poor. So I think there could be some tax concessions at the lower income strata, but on an overall basis, I think our tax to GDP should go up. So I would not expect any meaningful tax breaks.
Okay, fine. So we're done with the budget. Now let's come to the fun part of this. Where are markets going to go next month?
Next month?
Yeah, but this weekend I can't ask
0%. We don't work for CNBC,
No, generally speaking, you said that it's a 0% return game when it comes to 1 month after the budget. So I'm asking you the month after that.
So I'll give you a perspective. We discussed about earnings. Our view is that in the next 6 years from 2014, which is, till 2020, earnings have the potential to go up by 2.5 to 3 times. Which is what happened between 2002 to 2008. Earnings went up by 3 times and the markets went up by 6 times. You're not saying that the markets will go up 6 times. But what you're saying is that the earnings growth definitely will pick up pace. And that would mean that by December 18, you would be looking at a Sensex EPS of somewhere in the region of 3,500 to 4,000. Now, depending on how bearish or bullish you can give a P of 15 times or 20 times and you have the, the broad direction in front of you. And from our perspective, with interest rates definitely looking like coming down, it's a question of when rather than whether. S&P might have said whatever, but it's a question of when rather than whether, the country's rating is going to go up. I think, Manish Bhai clearly said that even if you are bearish, equity is the place to be in. And if you're bullish, then equity definitely is the place to be in. So I think the best returns in a relative sense can definitely be made in equity, and we believe that even absolute returns, decent absolute returns are still possible in Indian
Sunil, think about sectors to invest in. I'll come back to you in just a bit. Dharmesh, we had Mark Faber on the channel a few days ago saying, India is way too expensive. We're not anywhere close to our peak valuation.
He said that when the index was 8,000 also, Sensex.
That's true, actually.
I mean,
we're not anywhere close
to.
Yeah, no, we're not close to peak valuations, but we have moved higher than trend valuations, right?
I remember that day in 2008, me and Manish were together in a room with all our analysts, and we said, let's put our best target for the index, based on whatever earnings were there in 2008. And the highest number came back around that time was 10,000. So we became super bullish and said, let's put 15,000 as next Diwali. The market went to 23,000.
Yeah, but then we saw what happened after that.
Yeah, but even then, 23,000 was the money of your life you made in that index. So we are in that stage where, I don't think so we are anywhere close to...
Are we in that stage? Because that was actually a very, it was a very unusual stage of a global boom, right? We're not necessarily in that stage at this point in time. But I'll differentiate the global context at least.
Yeah, but we are in the India boom story right now because everybody compares us to global markets. The domestic economy is yet to kick in. And the power of money with the investors, you can see how much money has come into mutual funds in the last 1 year. Earlier, nobody used to invest a single dollar into mutual fund, right? So this is what is the change when
So
you
we're
see.
not expensive right now?
I think we are reasonably priced, but the kind of growth which is coming, we are not definitely expensive. And again, in the cricket parlance, we just won the India-Pakistan match. The day India wins the South Africa match, with a 150-run target, everybody will start feeling bullish and start investing. I think that we are in that stage. We just need one more victory. And then you start believing the story.
In fact, it touched upon that we are not in the global boom period. In fact, we are in a better period because India is the only country in the world where interest rates are going to go down. There is no other country in the world where interest rates are going to go down. In fact, every other place, interest rates are expected to go up. So India in that sense is among the very, very few sweet spots where you have this tailwind of interest rates cuts. No other
there are
country in
many
the world.
countries who are cutting rates because of,
They are already at zero, almost zero.
Well, okay.
In fact,
we
Germany,
won't do
you
the
pay to
zero-bound
deposit.
discussion right
So
now.
I hope Axis Bank would be in Germany. They would get paid to, take deposits.
So I think you'll get the same answer, Mehta.
We did 30% returns last year on the frontline indices. Are we going to do 30% this year?
I don't
In
know whether we
2015?
do 30%. I think I just want to bring this into a little bit slightly different context. I think we started this rally about 18 months back. Yeah, and there's been a number of things which have been powering this rally. I don't think it's about earnings. It's about hope. I think first the hope was the changed political climate. Then there is more hope because oil prices came down. And the third thing, very important, which Sunil mentioned, was about this whole global liquidity, there being no alternative. I mean, I've been on some roadshows with some of the large sovereign wealth funds, and they're all saying, this is the only place of growth. Now, you also need to put it into a context, and which may be slightly longer term in nature, but the impact that you are going to see in the short run, which is, globally, you are actually headed for deflation. Global demand for most of the developed economies, as you actually start to see populations really, growth actually turn negative, aggregate demand is going to come down. So we are getting into a globally deflationary scenario, not today, but maybe over the next 10, which means long-term cost of capital is going to stay low. In that environment, this growth which we have in India becomes even more valuable. So you will see, probably it's been repeated earlier, you may actually see a change in the valuation paradigm itself. I think I heard the previous discussion we had, PE funds are really willing to pay a lot more for growth. Some of it obviously will not work out. But generally speaking, if global cost of capital is going to head down, and this is a long-term, multi-year story, you will see very different PE multiples. So till the time that hope is there that we go back to 7-8% kind of growth, or even let's say 7%, but that's there for 20 years, I think you will see valuations getting higher. So this market does not move on next quarter numbers or the next quarter, but it's all on that hope that we will get back there.
Excellent answer, but you didn't answer my question. Are we going to see 30% returns this year as well?
I can't answer that. That's a tough one. That's a very tough one. But we will see, I think, as long as the intent of the government is there, I think we'll see much higher levels from where we are today.
Prashant? there are a lot of investors who probably sort of came back or were drawn into this mother of all bull runs, as Rakesh Jhunjhunwala puts it, let's say late last year, in the early part of this year. And they might be a little disappointed because, they haven't seen the big rush that everybody else saw since the middle of last year. Are we going to see 30% gains this year?
See, 30% is very difficult to say yes or no, but let me give you just one insight. Markets are trading broadly 16, 17, 18 times 1 year forward. Interest rates are at a peak. Corporate profitability in India is at a 16 to 18 year low. There were 5 or 6 drivers of margins lower. Interest rates, high commodity prices, currency depreciation, very high wage inflation, and lower capacity utilization and lot of stuck projects. All of these 6 are becoming resolved now. Commodity prices coming down, currency stable, appreciation pressure, interest rates moving down, wage inflation down to very low levels, capacity utilization should improve clearly, no new projects are coming up in manufacturing, and projects are getting resolved. So I think if you just do a mean reversion of profits, I think the profit growth will be much more, and this is what Sunil and I referred to earlier, than what we are building into our numbers. And if you believe that, then a 16, 17 multiple is not demanding. And when someone says India is very expensive, maybe he is comparing India to countries where 60% of the markets are in commodities. But barring the maybe consumer staple sector and maybe one or two small sectors, I don't see any excess in valuations. In any case, the quality premium in these markets is very high. So if at all something is being really expensive, is just quality. But broader markets, I don't think are expensive.
Okay. If crude went back to $80 a barrel, would you feel that good about India?
Yeah, I think I'll completely endorse what.
Do you agree with all of this? Yeah.
I'll just give you one of the other insights. I think as long as there is a disbelief in the markets and a disbelief in the economy, equity market will do well.
As long as there is
disbelief.
But there is no disbelief on this panel. I was going to say that when you see consensus
there is a disbelief in terms of whether the growth is going to come back, whether there is a disbelief, whether the sufficient investment is going to be made in kickstart the economic growth, whether there is a disbelief whether interest rates will come down or not. So ultimately all these things relate to the potential earnings growth that could come from the companies. That's one. And second is the last year when we did an event on equity voyage, which Manish mentioned about. Clearly, nobody had believed that, yes, equity market can go up so much, and equity market can give about 30%, 35% return on Sensex the last 1 year. Nobody had predicted that. And the same way, if you have to look at it, I think trying to predict actually the next 1 year what the market could give a return, probably we'll have to look beyond, is the asset class is going to perform better than the last many number of years? I think the answer is big yes, actually.
Okay. Okay. So let me then ask you, and the answer to my next question cannot be mutual funds. I'm just warning you right now itself, okay? So my next question is, where should investors put their money? Should they put their money in infrastructure, capital good related sectors, because you expect there will be a big spending push, and a big recovery, and that's where the beta lies? Or should they put their money in, let's say, consumption-led stocks, FMCG, auto, because of all the reasons that you listed in your very first answer, saying there will be more money in the hands of the consumer?
First of all, they should put money in equity. I think that we should first agree on.
That if we're sitting in the Bombay Stock Exchange building is a given.
If you ask them, how many of them have even 10% exposure to equity, I think except Vallabhbhai or Manish, no one would put their hands up, I think. So I think first of all, we have to put money in equity. Second is, obviously, we are positive on both the consumption cycle as well as the capex cycle. However, on the capex side, very clearly, there are two prerequisites for investment. One is the balance sheets have to be sustainable. That means the companies have to survive. And second is, in the foreseeable future, you have to have earnings which justify the price. There are companies which are now justifying 2020, 30 PE multiples. I think you have to be a little bit careful of that.
You want to name any?
No, I think I was joking with my colleagues in the office that this March 15 balance sheets will have 50% of the companies with an aeroplane as, a product sort of a picture. Because everyone wants to now say, I am in defense, I am in railways, and I am so and so. Just because you are supplying some small parts to railways or defense, it does not mean that you buy at any price or, price. So I think sustainable or visible earnings, at least in the in the foreseeable future. So I think CapEx definitely, but you have to be very choosy. And on the consumption side, we are very positive on the urban consumption theme. I think last 4-5 years, the rural consumption did well because the minimum support prices were going up. Inflation was in fact beneficial to the rural side because they were the cause of the inflation, and urban consumption was suffered because one, manufacturing was not doing well, services was not doing well, and there was massive inflation. I think that is now behind us. So urban consumption theme, whether it is staples, whether it is discretionary like autos, should do well. At the same time, we have to be careful. There are stocks which are trading at 40, 50 multiples. So unless you are confident that the growth is going to be justifiable, you have to be very careful of that. And I think private sector banks, we continue to like a lot. Companies or sectors which have built-in capacities where the operating leverage can come in, like cement, for example, I think we are positive there also. So urban consumption, CapEx, but with decent balance sheets and visible at least earnings. And obviously, sectors which have huge operating leverage because there's capacity built in.
Okay, Dharmesh, let me twist that question. Sectors and companies that investors should stay away from.
I think so. The entire markets will do well, but obviously someone will underperform. I think it's very difficult that sectors will go down or like you have negative returns in any sector. It may happen that the other sector may do 20-30% and you just done 10%. Because in the entire growth phase, everybody benefits.
So which sectors could those be?
I think so. The ones which are already at high PE, they may not, I know the call has gone wrong earlier on pharma and FMCG. I think so, but in this growth story which is going to happen now, if they do it right, they definitely should underperform the markets. But those are great defenses if something goes wrong in the budget.
So both ways you're saying stay
No,
invested?
so I'm saying I would know exactly on Monday or a Saturday as the markets are open, where to be in. But even if you buy on a Saturday or a Monday, it's not that it's the last day to buy. You don't have to buy on a Friday. You may be buying 5% higher or 10% higher. You'll get enough chance in the market to buy it the next day after you know everything. As I said, when Mr. Modi came, the markets were down. So you had enough opportunity on that day also to buy.
Okay.
So don't try to be over smart and try to play the market before it happens.
Large caps or mid caps?
From my perspective, it is large caps right now. I think while we always espouse bottom-up kind of stock picking and companies with pricing power, which gives you sustainable growth, but right now, because of the way the markets and the flows have been, essentially, largely the mutual funds, I think most of the money has gone into mid-caps, and on an average, mid-caps are probably more overpriced as compared to large caps. That's not to say that select mid-caps will not do well, but I think as an asset class today, I think large cap provides much better opportunity as compared to the mid-cap space.
Prashant, you want to pick 5 companies? Defy SEBI, Prashant. Defy SEBI.
I'll give you one really good thought. If you look at the last 22
one
years...
One good thought?
Yes.
Not one good stock.
This thought is more powerful than many stocks put together.
We'll put that to vote with this crowd. Okay, go ahead.
Well said.
See, if you look at last 22 years, foreign ownership in 1991 of India was 0. And today foreigners own 24% of the markets. So on an average, Indians have sold about $10-20 billion worth of their own stock markets. And what have they done with the dollars that we have got? We have gone and bought gold with that. Gold, if you look at last 10, 20, 30, 40 years, has given you returns which is very close to inflation. So what in a sense we have been doing as a country is we have been selling our 15% CAGR asset, which is the Sensex. Mutual funds have done slightly better. And we have been exchanging it for a 8 to 9% CAGR asset. And I think that's a thought which is worth more powerful than many stocks put together.
I can't even argue with that, can I? Okay, Bala, have you seen the new BMW? It's 3.2 crores. Can you tell me 5 stocks that I can invest in to make 3.2 crores in the next 3 months?
How much do you have to start with?
But
you have 5 crores.
Do you know who actually funded them actually?
Who? The BMW?
The people who put money in mutual fund 20 years back.
Yeah.
They got the full funding of buying a BMW Mercedes out of the redemption money what they had.
Oh,
that's the kind of money made the mutual funds.
So this BMW I'm not going to own this year for sure.
In fact, I just got a message yesterday that a few years back, the price of a motorcycle where there's a wait list of 8-9 months was 50,000 rupees. If someone would have, instead of buying the motorcycle, bought the stock, he would have been riding a Bentley, because that would have been worth 4 crores instead of 50,000. So I think that is the power of stock market or equity investment.
Okay.
I think there's point, of course.
So he's told me buy Bajaj Auto or Hero. That much I figured out. Now what are you going to tell me?
No, if you would have figured out, then who would put money in the mutual fund?
Of course, the way we look at, I think the large portion of the consumption-led theme cannot be ignored in the country, whether it is in pharma space, whether it is in FMC space. Though there will be a lot of discussion around valuations, clean balance sheet, very strong track record in terms of governance. I think will continue to create shareholders value. And we also believe that a lot of companies who have managed the balance sheet quite well, even coming from the sectors which are largely consumer of capital, including the capital goods sectors, we believe I think will continue to do well. Even the banking, we have seen many number of years, the banking as a sectors, whichever has been consistently performing in terms of building up the retail books, they continue to deliver shareholders return actually continuously. Therefore, again, there is another sector we remain bullish. I think coming back to the point, I think what you mentioned about BMW, etc. Interestingly, we had some discussions about a few days back. A lot of questions were going around people actually, what are the kind of products that they consume in the country today? Right from your toothpaste to the soaps and the clothes. A lot of people have mentioned about everything, but they never used to have the companies that are producing those goods. And at the same time, we asked the question actually that all these companies are making profit for you, better to invest on them. And then we also asked the people actually, who are the people who are actually making money for you? Is the mutual fund money managers. Again, they also don't invest. So if you look at it from their angle, I think people have to start making investments rather than debating about what sectors to buy and what stocks to buy, and whether it's large cap or mid cap. I think we start actually looking at the mutual fund as one of the products actually to buy. I think their life is made. The other interesting point which we had, this year industry has collected almost about $12 billion of equity inflows the industry has got. This is the first year the domestic mutual funds buying has almost closer to the kind of money that has come from foreign investors, which are roughly about $40 million. Because never in the history has happened in the last so many number of years. But that shows actually the power of whether you will be successful in buying a stock directly, or you will buying actually mutual funds and then you will become successful.
Gentlemen, that's a very big burden. Now all of you have to work really hard this year to justify all that money that's come in over the last 1 year. I wish you all the best. We spent the last 45 minutes to an hour saying the budget is irrelevant. That's always nice to know because we're going to spend the next 4 days only programming on the budget. Thank you very much for your time and thank you for being a lovely audience. I don't know if we have time to do any questions from the audience.
We have one
but we have Mr. Vasali here already,
also.
so we'll hand it over to him. Thank you very much.
Thank you.
Aditya Birla Group presents Budget 2015, the Make in India Budget. Co-presented by SBI. What market wants.